Hi everyone, we're here in Sydney, Australia for another edition of Stock Smart's Basics, where we give you the basic foundation of trading and investing with the ultimate goal of helping you reach your goals of financial freedom. For this edition of Stock Smart's Basics, I want to talk about diversification. A lot of you have been asking about, does diversification really work? Is it useful? Do you really have to do it? Is it beneficial? Well, to make it easy and to make it short, yeah, diversification works. It's something that's very, very useful. However, let me give you this caveat. Do not diversify just for the sake of diversifying. Do not also diversify just because you did not study. I've seen a lot of people that would pick a certain number of stocks. Then, as they would pick their certain number of stocks, they have 5 or 10 stocks in their watch list. Then, because they're not sure, they did not study, they don't know what's good, they did not use fundamental or technical analysis, they just buy all 10. You have to understand that's not proper diversification. Diversification should not be an excuse for you not studying your stock. You must study the technicals. You must study the fundamentals of the stock as well. Why? Because when you study the technicals and the fundamentals, it will align you, it will help you, it will guide you, it will tell you which are the ones that are really, really good and which are the ones that are not so good. Why am I saying this? So if you have 10 stocks that you're watching, 10 stocks that's part of your watch list, why would you want to buy the 10 that's ranked lower as compared to one that's probably the best in terms of technicals and fundamentals? So that's what I'm saying. Do not diversify just because you did not study it and you just really want to buy a stock. Diversify because it's part of your plan. Diversify because it's part of your strategy. Next, do not buy a lot of stocks just because you're not sure. You must be very, 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 very intentional when you start to diversify. What do I mean by this? When I say you have to be intentional, it's very important at the onset you already know how much stocks you're buying. How many stocks are you buying? Is it 1, 3, 5, 10? Why? Because if you over diversify, you minimize the effect of the stocks that you want. But if you just buy a few stocks, also you get hit. So why am I saying this? The way you can diversify, it can be per sector, meaning you have a certain stock, a different stock in a different sector. You're buying one stock in consumer, one stock in banking, one stock in one holding company, one property development company, so that you have to understand they don't move all at the same time. There was a time when mining companies were down but conglomerates were up. Now when conglomerates were starting to reverse, were starting to go down, that's when the mining companies started to go up. Everything is also sectoral. Another way to diversify is you can combine stocks that are totally unrelated. Let me give an example. You can combine Jollibee with a telco company, Jollibee with Manila Water, because the way they're built, the way they're associated with each other are not relatively connected. Another way for you to diversify is this. You can also connect stocks that like what I said, Manila Water, that are relatively pegged as utility stocks that will earn regardless of what's happening in the economy. Then you can pair them off, or you can combine it with certain stocks that are growing, like banks. You have to understand this: in a growing economy, banks will really, really, really do well. But in a recession, they will be the first that get hit at the end of it all. So diversification is relatively important. Diversification is something that is useful, but it must be intentional. So a lot of people are asking me, how much stocks, or how much should I put to each stock? How do I allocate each stock? You have to understand this. I wrote this in my book, Stress-Free Investing. It would be relatively dependent on the amount of money that you have invested as well. Siyempre, the larger the amount of money that you have, it allows you to buy more stocks. The lesser the money that you have, it allows you to just focus. It doesn't make sense to just buy 5 stocks if you have 100,000 pesos. Concentrate it, focus it, make your gains count, make your gains matter. Diversification also in a financial planning context is not putting all of your eggs in one basket. So what does that mean if you're not putting all of your eggs in one basket? It essentially means this. What would give you the confidence to invest aggressively in the stock market if you have other assets that are not just invested in the stock market? You have cash, you have mutual funds, you have bonds, you have real estate, you have businesses. But for me, one way to hedge everything is get gold, invest in the stock market, start a business, and do property. Those are items that are not related to each other. So the more unrelated your asset class is, the more diversified you are. Think about it. If you have other sources of income, you have other sources of investments, no matter how they drop or they dip or they don't go so well, as long as you're hedged, you're protected, it would be relatively fine for you, not just for the short term but also for the long term. Another way to look at it is bonds and stocks. They don't go together. What does that mean? When the stock market is doing well, bonds are not so good, but when the stock market is bad, people will want something that's fixed, people will want something that's more secure, hence bonds will be more attractive and will do well. So that's another way to do it. Another way you diversify is via geography. What do I mean by that? When you diversify via geography, you can invest not just in the Philippines, but you can combine your assets. You could have assets in Singapore, you can have stocks in the US. So what does that help you with? If the Philippines is not doing well, if the Philippines is in a downtrend, you have other stocks that you can play with. You can have other stocks that will hedge you as well. So that's what diversification does. It's very, very useful because it hedges you, because we can't be right all the time. Every time we make a mistake, the way we diversify will protect us. If we make a mistake, the way we diversify also will allow us na our losses may not be as pronounced as what we would have experienced if the market would go down and we just have one or two stocks as well. So I guess that's it. More videos here from Sydney, Australia. Diversification is good if done well. Diversification is good if done on purpose. Diversification is good if it's done with intention of using technical and fundamental analysis, and it's not just done blindly. So that's it for now. More videos soon. I hope this helps you trade well, trade strong, trade smart. God bless you all.